So, you want to be a better trader, better investor, make more profits, or just get a better understanding of the financial markets? This is the podcast for you. You are listening to Traders of Money, brought to you by TradeDelicious. Now your host, Jordan Mellor.
Oh, well, it's good to have you here, Mickey. It's really nice to finally sit down. And before we get into everything and chat about everything we're going to talk through today and bring all those expertise to everyone listening, I wanted to just give you a big congratulations for the successful launch of Trade the Pool. What an achievement. I mean, I'm sure the adrenaline's still through the roof. How's it feel?
Definitely. It's amazing. We did something really incredible in our field, the stock trading field. And we're happy to do that. We have a lot ahead of us as well. So thanks for that.
Fantastic. No, yeah, it was good to be a little part of it and to be around the team as everyone's building it as well. It's good to see it unfold and so quickly. I mean, when you look at it, it took a while, but when you consider what you actually achieved, big pat on the back for that. So
thanks.
Let's dive in. We're talking US stock markets, right? Because that's where your expertise lay, right? In the US equities market?
Exactly, yeah. US stocks, mostly day trading. Mm-hmm. Yeah, US stocks, a little bit futures as well.
Yeah. So I played around in the US stock market, I want to say maybe 2 years ago. I lasted about 2 months. Now, I didn't lose money. I think I was very close to break even, if not a little bit in profits. The reason I stopped trading is because it was like 2 a.m. at my time. So I was working like 2 a.m. to 6 a.m. and it was just, I couldn't do it. And that's when I started adapting to the Asian session in the FX markets and went on from there. Okay. Obviously, that's not an issue you face, but what was the big driving factor that pulled you to US equities rather than trading in Europe or trading elsewhere in the world? Why US stocks?
Yeah, I guess for us here in Israel, most of the the YouTube that we saw or the channels or just the normal websites, educators told us about the US market. So that was at first. And obviously, it's like the heart of the financial markets, the Wall Street, where everything's begin, basically, right? All the big companies, everything that we buy on a daily basis. So I guess that's what actually moved me to that market. Maybe one day I will go to the European market as well, but I'm looking for, especially as a day trader, I'm looking for volatility, I'm looking for volume, and you can get it in Wall Street. Yeah.
Fantastic. So follow the money, essentially. Follow the big players, follow where the volume, the volatility is. Do you, when going down to your day trading routine, because you're more of a day trader than a swing trader or an investor, you would say.
Yeah, definitely.
What's your, without giving too much away, what's your edge? Are you looking for volatile stocks? Are you looking for flat lot? Like, where do you best see your probability of turning a profit?
Right. So first of all, I'll be happy to give everything away, because at the end, something that I learned throughout the years, that it doesn't really matter what you trade in or your secret weapon, stuff like that, because at the end it's about the trader, right? I can teach you the same thing that I've been doing for 15 years, day in and day out. But if you're not me specifically, then you probably won't get it the same as I, right? You can do it even maybe better or less, but at the end, it's super individual. Trading, it's super individual. So what I've been using for many years, what I like to call it the SMM strategy. So it's like a set of rules for buying the dip, basically.
Okay. Did you create these rules, or were you taught these rules?
I created, obviously I learned,
a bit of both.
Everything from, but I created or combined those parameters together, what fits me. So that was the first thing that I've been doing for let's say 8 years. I've been doing that mostly, buying the dip or either selling the top. And but the main, let's say, if I want to really see what pushed me forward and creating, other than making like a few thousand a month, but actually making 10 and 20,000 a month, was the main jump was two elements. One, the edge that everyone talking about. So I went to the statistics of my trading and took out everything that I can understand and get from it. So, for example, I looked at the volume that I've traded the most and where I'm making more money. I looked at the price of the stock. I look at the gap. Usually, I'm trading gaps. I'm waiting for like it opened with a gap down, then melting down, then I'm buying the dip. So the gap that it started from, the news, the important level that blocked it and pushed the price up. So all of those elements, I gathered everything together and understood where do I really have an edge. So you get my point. Basically,
Yeah.
what kind of trades were my best trades, and the others that didn't work, what happened there. So as soon
Hmm.
as I got all this information, I understood better my trading and could make more. The other part was actually more mental part. So I had a student of mine. He was a
Hmm.
business guy. He learned from me how to trade, and he actually pushed me to think clearly about trading as a business. So he said to me, you already been trading. You're making 3,000, 4,000, 5,000 a month consistently. Okay, that's great, and you can live out of it, at least here in Israel.
Yep.
But you actually can make a lot more. It's not about greediness. It's not about really the money, but just doing what you already been doing good. Just make more out of it. So you pushed me forward with that, and those two elements together made me push myself amazingly the last couple of years.
That's fantastic. I love the way, and it's happened to me too, where people who don't know trading or aren't that big in trading can give you sometimes the push or the answer that you need. And it's
Yeah,
remarkable in how it does that. And that's why you see some of the best trading psychology coaches out there or whatnot. They don't know much about trading. They don't know how to trade, but they know how to get a trader to perform, or at least how to break those barriers. And I think it's impressive that someone from obviously business minded, I dare say probably an entrepreneur or somewhat, has come through
right.
and shared his experience. I think it's powerful, and it's cool on that. Moving
Yeah,
back into sorry.
that's no worries. That's if I can recommend anyone that listening right now, just find this mentor guy. It doesn't have to be someone from, like you said, someone from the stock market or the market itself. Just find a guy that can push you forward just to become better. That's
Mhm.
definitely will do the
Absolutely.
job.
Absolutely. Moving back to your edge, or at least the way you trade, from what I picked up from what you've just put down there, it sounds like you look to almost fade overreactions in the market.
Yeah,
That starts to me sounding like where your edge is, which is very similar to the way I trade in the Asian session, fading when we have big volatile moves when it shouldn't have happened, looking to fade them back in. And it sounds like your edge is very similar in looking at these stocks. Do you is there certain cap stocks which you look at? Do you like ignore the small caps? Do you only trade the large cap stocks? Like how do you filter through what's going to be a good decision for you and what's going to be a red flag?
right. So I guess we need to understand first the period of time that we are trading in, right? Because, for example, if you take the last, I don't know, 2 years, you can easily trade the market like if you trade in the ETFs. So the
Hmm.
SPY, the ETF for the S&P 500, or the QQQ, the Nasdaq 100, or if you trade in the futures, the NQ and the ES. So you can literally trade those day in and day out
Yeah.
because it's super volatile. And I just traded a few days ago. I traded the Nasdaq when it dropped. You probably saw it. It dropped like crazy down, then bounced up
Yeah.
tremendously.
That on the
And
CPI data?
yeah,
Yeah, on the
exactly.
CPI data, yeah.
And now we are at almost like 11,300 or something like that on Nasdaq, a little
It was
bit
a
more.
remarkable rally, wasn't it?
Yeah.
Remarkable.
So I traded that. I entered on a little bit longer time frame, like a
Mhm.
4H, but I entered that because the price dropped down. You understood the manipulation that they're trying to put everyone in that short, getting their stop losses. So basically, like a short squeeze started to happen, and that was the case. So you can easily trade the SPY or the QQQ or the or the ES and Nasdaq. But if you want to go specifically for stocks, what I would look for are stocks that are volatile and with a lot of volume at the beginning of the day, usually opening with a gap down or up, because I can also sell the top. But you want to see the catalyst that moves those stocks. So you want to have good news or bad news that pushing the stocks further to the downside or the upside. That makes
I
sense?
see. Yeah, yeah. So you're looking not only at the technical aspect of where prices moved and where positions haven't been, filled, where market orders may still be sitting, but also understanding from a fundamental analysis point of view, is this an overreaction or is this a valid reaction from the market? And then you're placing your positions based on your interpretation of that, and looking to fade those. Is that correct?
Yeah, and you wanna, and most people maybe miss that point because they are only going for the technical part. But if you don't really look for the news, and if you don't understand the news, I'll call it numbers.
Hmm.
If you don't understand that you're missing a lot of the picture, right? The big
Yeah.
picture.
No,
If
I
that
agree. I'm big on fundamental analysis and having that push. And then once I have my fundamental bias, then I can look at technicals and I can look at which way to go. But obviously, it works a little bit different in the FX world. But
right,
yeah, same thing. I think it's paramount. Not only I found bringing fundamental analysis into my trading that it brought conviction. I
right.
was able to hold positions longer. I had more faith in my positions. I was able to risk more mentally because I had that extra level of conviction behind me. Now, whether it actually made a difference or not, early stages, who knows?
Right.
But it allowed me to have that extra confidence in those positions, which is
What
similar.
what is it that you're looking for? Let's say in the FX market, what kind of news are you looking for to confirm your trend?
As a whole, look, obviously the biggest move recently, it's been a little bit crazy with inflation kind of happening all over the world. But usually, inflation figures, interest rate figures are your biggest incentives and where things move. When I start looking at currencies, which I understand a little bit better, like for example, the Australian dollar being here in Australia, I will look into the manufacturing PMI. I'll have a look into the services PMI, and you can kind of they like drop crumbs
Yeah,
on where we're really heading, and especially the services PMI, it drops some very large crumbs at what our employment data is going to be. And you can usually catch, because these moves usually happen prior to the news being released, because people pick up these crumbs and you see a consensus move the charts prior. You can usually get yourself, if the technicals line up, in some great positions moving prior to those releases. And then very similar thing, if you get like that CPI data, okay, grand scheme of things, yes, it missed forecasts. It went up to 8.2%, I think it was. We wanted 8.1%, so it didn't miss by that much. And when you look over the past 3, 4, 5 months, we have kind of pulled in a little bit, or at least flattened that curve. So everyone's initial reaction was, this is terrible. And that's why obviously you saw the S&P just get absolutely stumped
yeah.
and everything around. And then
Hmm.
everyone went, well, like yourself, would have obviously made money on that opportunity, went, oh, hang on a minute, this is a bit of an overreaction. And the market's had an incredible rally over the past few days. But same thing, I'll look into most aspects. When I'm looking at the pound is a funny one, the sterling. I'll look for macro factors. So things like, we're coming into winter, there's a war in Europe. We kind of get that idea about it. It's not necessarily designated to figures.
Right.
But when you're sitting in a little bit easier of an area, Australia heavily linked to the Chinese figures. Chinese figures moves the Aussie dollar. You can kind of pick up little crumbs and compile that with some good technical analysis. You can find some fantastic opportunities.
That's
That's how
great.
I run it.
That sounds great. And by the way, also one more thing that happened when the Nasdaq dropped and then bounced up. It was funny. We talked about it like live, also in our Discord, but also here in the office. When I said to Ruben, something is not right. The price of the Nasdaq dropped down, but then usually what you will see is that the VIX, the volatility index,
Volatility index, yeah.
will bounce up, right? They go the opposite direction, but it didn't. And I said to Ruben, he sits next to me, and I said to him, something is fishy, something is not right. Why is the market is dropping like crazy and the VIX is standing? So that was also a nice point to understand that they will try to manipulate the price. So in case in the future, anyone that listen will see the same reaction. So one market is dropping or popping up, but the VIX is not correlating, then definitely say to yourself, something is fishy.
Yeah, I love those situations. I look for them every day across 7 or 8 different pairs during the Asian session, because we usually in the Asian session get that lower volatility. So when we do get these large moves, they're not large moves in compared to what you can get later on, but out of context moves or everything. And those volatility indexes, I know we deal with tick volume, but usually they're 80% correct anyway. If you get something's not right, we're pushing higher and higher, but volumes like really shrinking down, the CMF indicators coming down, it's usually a good incentive, like, hey, something's not right. We've got the bullish pressure, but there's no people buying. And that's usually where I can capitalize on those smaller technical aspects as well. So it's so interesting that we trade completely different markets at completely different times, yet theoretically it's very similar style of trading.
I mean,
it is. That's just surprised me.
It's the same. Markets are the same. If I would go to Australia and start trading the Australian market, the stocks of the Australian market, let's say, it will take me like a minute or so to understand the small nuances,
the differences.
The differences. But at the end, it's kind of the same. It's market behavior, it's human behavior, algo's behavior. Right. So those
math psychology. That's all it is. Math psychology. You understand how majority of people are going to think. You can understand where probably price is going to go.
Right.
Do you also invest in these markets outside of day trading them?
Yeah, but very like, I don't know, like 10-20%, not more than that. It's just not my thing. I got the money that institutional just manage for me, like normal, like a 401
like super funds and pensions and stuff like that.
Exactly. But other than that, I'm looking to do in life, I guess it's something that I've been chasing, is just doing something that I like. If I'm not liking it really, then why should I waste my time to do so? Now 100%. I know some will listen to that and say because you can make more money or whatever, but at the end, I'm trying to choose in my life things that I enjoy doing, and this is probably the main reason that I got into day trading, because I understood that it should be much more fun or much more computer-like. Trading is very similar, and I love to play games. So trading is super similar to that, the action and everything. So this is why I got into that, and I still love it till this day.
It seems to be working pretty well for you, so that's a good thing.
Regardless of the money, it's just fun to do.
Yeah, 100%. How did you get into trading? What was the turning point? Where were you at? Where, like, in your life, what was going on that you went, yes, this is it?
Yeah, so I remember back in the army days, like at the end of my army service, I I got my ex-girlfriend got me a book of Robert Kiyosaki,
Is that
Rich
Rich
Dad
Dad
Poor
Poor
Dad.
Dad? Yeah.
Yeah, like a
Yeah.
classic. And I knew that I don't like the 9 to 5 job or whatever it is, and go to like a college or university. That wasn't really my thing from the get-go,
Hmm.
since I remember myself. So then he presented me with this book, presented with real estate, stock market, small business, or like a huge firm or something like that.
Yep.
And I said, stock market sounds good. Let's start digging into that. So I was in my early 20s. I learned literally from everything that I could grab. There wasn't a lot of information like today. You go to YouTube, you just type in stock trading, you get like millions of videos.
Yep.
Back in that time, I went to a couple of sites, printed a lot of um, things, about indicators, a lot of information about indicators, about the stock market, psychology, everything that I can grab. And I had like 2 years of just massively sitting every single day and learning more and more about the market, watching charts, educating myself basically how to do that the right way. Obviously, it didn't go the right way when I first started trading.
That's everyone's story. But
Yeah,
you have to. You have to go the wrong way in order to learn how to go the right way. And that's the difference with trading compared to all other careers realistically out there, is you've got a boss in another career to tell you when you've done something wrong. And
right.
to kind of turn you in the right direction, or you go to university or you go to school and you learn the way to do it, the way not to do it. Whereas in trading, it's like throw you in the deep end of a swimming pool, learn how to swim. And there's only one way you're going to learn how to swim, and it's when you're on that verge of drowning. You go, oh, okay, it's a fight for survival. And I found that here. I always find it funny when, especially I didn't go to university. And a lot of traders I know that have gone on to be really successful didn't go to university. But
Right.
I always say that we did a university course.
Hmm.
And the reason I say that is because I studied for 2 to 3 years, like, and I probably studied harder than a lot of people did when they did go to actually university.
Right.
And while it may not be accredited, while we may not get a certificate or a bachelor degree or whatever it might be, we still go through that studying phase of just getting, as you say, as much information in as possible, and then trying to figure out what it means, and then
Yeah.
trying to figure out whether or not it works. And the only way you can do that is by risking money, and it's this whole emotional roller coaster. But it's interesting to know you went along this. So was it straight out of military service? You went, yep, stock trading?
Yeah. But basically, I had like 6 months when I went to the US after the military. And
Hmm.
from that point, when I returned, basically started to learn. You know what? My first chart that I looked at was the euro dollar, actually, and not even
Euro,
a
US
stock.
dollar.
Yeah, and not even
What-
a stock symbol. So I'm trying
Do you, I was
to
chatting to
remember
Saul
why,
about this. Yeah.
but
Do you remember your first trade?
the first trade, probably not. Probably not.
I
It
can't
it
forget
wasn't
mine.
a it wasn't a stock, obviously, but don't recall which one. Maybe
I've
Bank
got
of America.
I've got mine framed. I've got mine framed up in my office.
Wow.
Yeah, my first ever trade, and
Okay.
it was 2 barrels of oil, a CFD, of 2 barrels of oil, and I made $1.01. And
Nice.
that was my first ever trade. And you couldn't ask me how I got into that position, how I even ended up on the platform I did to buy CFD barrels of oil. I don't know.
Right.
I just fell into that. And I wanted to remember, I mean, I was talking about it in the last episode. I went on to lose, $900, $1,000 within a matter of half an hour. But I remembered that trade because I was sitting on the sofa on my phone, and I just went, I just made $1. I'm like, I didn't do anything. I'm like, I just pressed a couple buttons and I just made $1. And that was when the possibilities of this woke up
Wait,
inside of me.
you traded from your phone?
From my phone. My first
Wow.
ever trade was from my phone, yeah. I think I had the web app of the platform open but I was sitting on the sofa just going, okay, the chart's going down here. I think I'm going to buy. I think that was like something like that. And it went up and I closed it and I look and I'm like, oh my God, I just made $1. I'm like, how did I
Yeah,
just make $1?
it was easy.
Yeah, the next 2 years following that was definitely not easy, but it's part of the journey. But that was when it hooked me, of like making me realize, okay, there might be something here, and there might be opportunity.
What was it in your path that got you, to become profitable, to push you to the other side of the
It was tough. It was tough. A couple different things, and there's a few people that have been influential in that, and I'm having them on in the next few episodes as well, which I'm excited about. I ranged between connectivity with these guys who were doing what I wanted to do, and people who were telling me to stop doing what I was doing.
Right.
And there was this fine balance of support and not support. And I was constantly jumping back and forth, like, are they right? Are they right? Which one should I be doing? And when you're focusing so hard on trying to get results and sometimes they're not achieving, then you're in that basket and then you're in that basket and you're kind of jumping back and forth. But I remember I spoke to a friend called Anthony. I had this terrible strategy and this terrible idea to go, this was very early on in my trading strategy, to go 10% per trade risk on this strategy that I'd been developing. And he knew it wasn't going to work, but he said to me, he says, I think you need to do it. He said, I think you just need to
understand.
Just to understand. And I did, and I lost I lost the account. But it did. And that was the moment where I realized no one is going to do the hard work for you in this industry. And that was when I stopped being inconsistent with how I was trading, because I was doing a lot of strategy jumping. I was doing a lot of, I'd trade this, or work for a little bit. I'll go to my first drawdown. Okay, this guy's doing this. Let's go try that. And I would never stay consistent with my decisions. And that was the moment I went, right, enough's enough. Let's sit down and be disciplined and at least stick to one system for 3 or 4 months. And then from then, never look back. I have changed systems from then, but because the data had said to. The data was telling me that, yeah, this isn't the right way to go about this. And so you start like kind of building as you did. You get your different assets and whatnot, and you start building it up as you go. But that was probably my biggest turning point, is when he let me blow my account. And there's been a few other people along the way, some psychological help as well, and some people that don't know trading that have just somehow hit the nail on the head of what I needed to hear. But that was probably the moment I realized that, yeah, I need to be more disciplined, and went on to be more disciplined. And it worked. It's just sometimes it's as crazy as doing that. But yeah, that was the biggest. That was it for me.
That's nice. There are always, this question, if you need to just trade one strategy and stick to that, or try lots of strategies until you find the right one for you. And I guess probably the best way to do so is just trying few strategies until you'll find the right one for you and stick to that. Today, I have I know a lot of strategies or techniques, but I can easily say that I have two main, like 80% of my trading goes to those two, and maybe once in a while I'm adding one more, but really focusing on those two, because I know this is what I like, this is what I understand the best. It proved itself during those years, so yeah.
That was the biggest thing. Evidence that the strategy had an edge, that the probability was in your favor when getting on it, and that was, I would never give a method enough time to provide evidence on whether or not it was good. So I was a good slap in the face, but a slap in the face that was needed, and it worked out. So I'm really glad I caught that slap in the face.
For you.
Yeah, I'm willing to cop plenty more if it keeps leading. But okay, so we were talking about this a few weeks ago, And I know it's a lot of people, especially beginner traders, love to find an excuse on why a trade hasn't worked. They love to
Okay.
say there's been manipulation in the market. They love to say this position would have happened, but the Bank of Japan just announced this or whatnot,
Right.
and they've been stop hunted by their broker. In stock trading and US equities, have you experienced much? I know short squeezing and stop hunting is a little bit more popular because it's a little easier with lower volatility compared to the FX markets and a little bit more manipulatable. But have you experienced much stop hunting? Would you be able to explain to the listeners what stop hunting is?
Yeah, let's try to do that. Usually we need the chart just to show them, but we'll try to
Hmm.
yeah, let's try to do that. So stop hunting is basically it's something that occurs every single day
Hmm.
in any market, even if in the forex market, because at the end it means basically that a big institutionals want to buy, let's say, a lot of shares of Apple. Let's say
Yeah.
1 million shares of Apple. Okay.
Hmm.
Now, in order to do that, you can't really click on the mouse key and just buy a market order with 1 million shares. It will push the price up. It will get a bad field executions. So you don't want to really do that. What he needs to do is to create, to basically manipulate the price to
To
create a
find an
feeling that
area where there's a lot of market orders.
exactly. And those market orders are basically waiting in a specific places, right? We all learned the same thing. At the at the lower after a pullback, you put your stop loss or at the eye of the price and stuff like that. So what it does basically put the price down, push the price down, take all the stop losses. The stop losses are sell orders. E buy from the other end, and
Hmm.
that for the price can continue higher after he actually got the full liquidity that he wanted.
Hmm. Okay.
So
I find we get a lot of those large positions being entered and exited in the FX market as well during news events
right,
because there is so much volatility and so many orders going. It's a great, and I work for someone who worked for an institutional firm out in Sydney, and he was telling us they would look for those, not the really large scale ones, but the little ones that could be manipulated pretty easily,
mhm,
and you'd be able to fill a very large scale order at a great price, all
right,
tightly confined. And that's what they're trying to avoid. They're trying to avoid their order being market filled all the way up, and all of a sudden you've got huge spreads on what your fill was.
right.
So have you had an experience with being stop hunted in your positions? Have you changed your strategy to adapt to it? Like, how do you go about it?
Definitely, definitely. So there are two things to look at it. One is, let's say you want a trend following, right? You
Mm,
have a nice move to the upside. You wait for a pullback, and then you want to buy because you believe that the price will continue higher, right? So in those cases, either that or a bull flag, right? There's a move up, consolidate to the right, and then you want to buy at above the consolidation.
yeah.
So in those two cases, there are a lot of manipulation of the stop hunting. They will actually trigger the, let's say, the bull flag. So everybody is buying right now. Their stop loss is below the consolidation. So they will push, mostly market makers and algos, they will push the price down, hunt those stop losses below the consolidation, and then they will buy from the other end. So
Okay.
when I started trading, one of my favorite strategy was bull flag, basically looking for momentum movements. And when they did that, obviously they took me out a lot of times. And then I understood, and that's only from experience and watching the charts and seeing those trades, been hunting again and again.
Hmm.
So I realized that when they pushing the price down and taking all the liquidity below the consolidation, they actually there are few elements that or parameters that can alert me beforehand, and also after they did that, I can jump in again. So beforehand, if I'm looking at the consolidation, most of the time you will see huge volume coming in, while the consolidation is occurring. So as we know, during consolidation, you don't really need to see a high volume, right?
Mm-hmm.
You don't
That kind of
expect to
defeats the
see a high
purpose
volume.
of consolidation.
Exactly.
Yeah.
But in most cases, if you pay attention to that, in most cases, you will see high volume coming in the consolidation. So this is like a first alert that you need to understand and say to yourself, wait, something is fishy going on. So the second thing, and then you can either skip the bull flag. So,
Mm-hmm.
just skip the trade, wait till you see a shakeout, basically, and then trade. The other option, let's say you in that trade, they shook you out. Usually, the price will stop either at the 20 EMA, the exponential moving average, after they drop it down, took all the stop losses. It will go down all the way to the 20 EMA, or that's a little bit rare, but it could go also to the 50 EMA.
Okay.
But in most cases, the 20 EMA will block the price. They will buy everything below the consolidation, and then the price will start pushing for up, basically. So you can jump
Interesting.
in to that trade, and it could be like it's a 90% success if you got that, because
Fantastic.
they're actually creating this situation just to buy more at the bottom. So it makes sense that the price will push higher. So
It's
you can
interesting
play with it.
because so many people try to blame stop hunting for the reason they lose money, or for and I find it especially in beginner traders, and perhaps those traders that don't take that next leap that they're trying to make, is that blame thing, because it can relate to so many different things on a psychological level, like the fact that you don't realize that we're in a risk market. We're trading probability here. We're not trading exactly. We don't know what's going to happen. We can just base
Right.
opinions. But it's interesting that you've taken that edge and turned it around and just joined them. Just gone, okay, let's see what their patterns are, because they're filling positions to push and manipulate the price. You can see that in the real volume, and then you can start reacting off that. It's a smart edge. It's a good trick.
So maybe this is why I also trade mostly by the dip, because those institutionals, those market makers, are usually by the dip.
Mm-hmm.
They're looking for that. Like I mentioned, the trade I made on the Nasdaq, the same thing. They pushed the price down on the CPI. Everyone thought that the market is gonna collapse, yada yada. They took that took that movement to their advantage, and made everyone basically get into that short so they can buy easily and push the price higher. So if you think like a market maker, then you started to see your technique will get better. Basically, you don't think like a retail trader.
Okay, I spoke with Saul quickly about this, and I wanted to chat with you about it as well. We were talking about painful experiences in the market.
Right.
Times and once again, back to our previous stats, they're needed. We need to sometimes feel that dagger to learn from mistakes and stuff like that. And so, I know a bit about your painful loss because you spoke about it on the Trade the Bull podcast. And
Right.
I wanted to touch on it today. Can you give the listeners a run through on the events that occurred on your biggest ever loss?
Yeah, it actually occurred like 2 or 3 years ago. It was on SPCE, yeah, space. Yeah, that company space.
Mm-hmm.
And that was a crazy day for me. Actually, 3 days. It wasn't. I suppose it should have been only a day trading
Mm-hmm.
trade, but it actually went on for 3 days. I bought it pre-market. I was up about $2,000. Everything was like normal, let's say.
Yeah.
And instead of closing that position, I don't know, greediness or whatever, it started to, like, the market opened and it started to drop down. So I'm losing those $2,000 that I already made, dropping down, break
Mm-hmm.
even, dropping down. I'm started to add more to my position. I don't know if we have time to talk about this, but
Hmm.
we should maybe one day do an episode about averaging down. So if
Yeah,
it's something that
we chat about it
might be
last episode, and I will a bit more because my biggest ever loss was the same thing. I was scaling into a losing position, and understanding the difference of when you should scale in and scale out is very important. And
right.
it will be things we touch on in the future. But
Yeah,
but yeah, no, we.
I'll be happy to jump in and do a podcast with you on that.
Mhm.
So yeah, so I'm editing more and more and more, and that day they were killing that stock. Guys are selling, shorting it like crazy. Every bounce like
Was
10
there
cents.
was there some fundamental analysis
Yeah,
at
yeah,
play? Or
definitely.
yeah,
Yeah, it was the first day that they shoot that. I don't know. It's not an airplane, but what's the name for it? Like a
ah,
space,
the shuttle.
like a spaceship.
Mm.
So they shoot it to the space.
Yeah,
The first
right.
the first launch of that ship,
Hmm.
and from that point, just melting down. Every 10 cents that it's bouncing, they dropping it down again, and I'm adding more and more and more. Suddenly, the broker that I worked with, still working with, dropped the leverage, the buying power from four to from actually six to two.
Yeah.
So I didn't have enough money to add to my position. So now I can't do really anything besides closing the trade. First day, I'm down 25,000. Second day, don't really remember. Also, I closed some of my position, adding more, just putting the price down, averaging down my entry price. And on Wednesday, it was um, I don't know. I don't recall the hour exactly, but probably something like 2 hours in the trading. I clicked on the mouse key with the last exiting trade. It was 91,000 down, and man, that was really the hardest 3 days that I ever had in trading, and that is like 2 3 years ago. So I was great at trading. I can say
Mm.
that, but
But
still,
it's not just 3 days, is it? The pain. I know, especially from my loss, I felt that, and it's kind of unexplainable. Like it's pure pain, and I felt that for weeks afterwards. It took me a
right?
while to grow confidence back in and to start going again.
Yeah,
Um, Now I didn't get a loss that big. I mean, at running equity, the max I got down was 34. It might have been $35,000, and I managed to get out of the position at a $6,000 loss,
wow, that's
which was
amazing.
lucky. Which was lucky.
Yeah,
I was, believe it or not, I was very happy to take a $6,000 loss. But I still,
yeah.
during that session, horrible. And for weeks afterwards, I couldn't look at charts. I was just in physical pain. Did you feel the same way?
I mean, it took me 2 weeks to get back in the game. I took a 2 weeks break, um, just to understand what I did wrong, what I could have done better. Because I did traded it not the right way.
Yeah.
You know, there were certain points during those 3 days that I could have, let's say, either closed with a small loss or even add to my position better. So it was important for me to take those 2 weeks to get better, basically, to understand what I could have done much better to improve for next time. I obviously took Excel sheets, set it up much more rules and parameters, calculated the max number of shares that I can add to any kind of position. I had a lot of those technical things, but
Hmm.
also on the mental side, you know, just to understand, just talking to myself and telling myself, it's a big loss, but it's not at the end. It's not the end of the world because you know what you're doing. You had,
You have the skills to recoup.
yeah, you definitely have the skills to, push yourself forward and rise above it. And
Oh,
that was
well done.
actually what happened at the end.
That
Yeah.
yeah, that Yeah, some of these losses and some of these loss stories, they really just make my stomach turn, because I know I didn't handle mine very well, and I can't even imagine.
When
But
was it?
no,
How how deep in your trading?
um, I'm gonna go. I'm gonna go less than 2 years ago. I'm gonna go maybe mid last year.
Okay.
It was just before I found prop firms, like internet prop firms.
Hmm.
Actually, so maybe a little bit earlier than that. Started 2021 around that time.
Okay.
Um, and
So
yeah,
you've
I
been
was
trading for a while
yeah
until
yeah
you.
yeah. I've been trading for about 4 years,
Okay.
if not a little bit longer. And I was trading with investors' money, which was
Right.
probably why it hurt even more. That added pressure of trading with investors' money, and yeah, it wasn't nice. It wasn't nice at all. But on the topics of trading firms, trade the pool. What an achievement! Where are we heading? What are we doing? Talk to me.
I mean, that's great. I'm so excited that we finally had this moment that actually a prop firm for stock traders
Hmm.
getting into that field, this industry. I, I said that before, and I will say it 100 times more. If I had the chance 15 years ago to get to a program that actually, with like $240 of my risk, to get $80,000 exposure and all
Yeah,
the tools that we're providing, it's a no-brainer. I mean, really, it's give us as
yeah.
stock
Hindsight's a
trader,
beautiful thing.
because at the end, as a stock trader, you need, especially as a day trader, you need 25K to trade the US market.
Yeah,
And even if you found like a way a little bit to pass it, you still need like $3,000 or $5,000, right? So instead of that, take that money, put it in the prop firm, in trade a pool, for example, and use that money to leverage yourself, to get much more of leverage, to get more support, the mentoring side, the platform that we use in the services. It's a no-brainer, and it's
that's what.
amazing because we see our guys. We already have several of hundreds been trading in that evaluation phase, and it's amazing to see that.
Yeah, I was saying, and just on that, like so many people will reach out to like trading courses and mentors and stuff like that, and you get that in the communities, both at Trade the Pool. I've seen the Discord is very active, and you guys are sharing even trade ideas that you're taking on the day during a session. I know you've done it live sometimes in trading with the traders live and showing everyone how you do it. So it is a remarkable thing you guys are doing over there, and I wish you guys all the best and success, and I hope
Thank you.
it's going to take off, and as you say, stock and roll. But going back to you, what's next for you? I know Trade the Pool's obviously your baby right now, and you're growing it up and fruiting. But
Yeah.
where's Mickey going? Where will you be in 10 years time?
Phew, 10 years, that's a
Big
lot.
question.
Yeah, especially as a day trader. As a trade trader, we think in small portions. But yeah, 10 years from now, that's amazing. First of all, I want to see Trader Pool taking over the world, no
Hmm.
doubt, no doubt. When it comes to stock trading, Trader Pool will be the leader. Don't see a reason why not to. For
Hmm.
day traders and also for swing traders, we will obviously have options and future trading we will add as well. So everything that related to stocks basically or around it.
Hmm.
Also for the European market, we will also have stocks for that. Probably for the Australian market as well. So this is
Outstanding.
definitely something that hopefully in the next even a year from now. Other than that, I really like, besides trading, I like to develop and innovate cool stuff for the tech, for the fintech industry. So I'm thinking of something like a place where everyone can trade together, but more visuals, adding more visuals, something that not been done yet.
Hmm.
And yeah, maybe I'll come and visit you in Australia or Canada, checking
Absolutely, you
places
should.
out.
Absolutely. You'll love it over here. Other than the time zone will be a pain when you're trading the US stock market, but
Right.
I think you'll love it over here. Well, thank you so much for joining me, Mickey. It was an absolute pleasure. And I think I'm going to get you one in the future again, because I believe there's still a few stones unturned that we need to chat about.
You've been listening to Traders of Money, the podcast that helps you better understand the financial markets, become a better trader, better investor, and be more profitable. Traders of Money is brought to you by TradeDelicious. Join your host, Jordan Mellor, next time on Traders of Money.